Welcome to Digital Asset News. Take your top stories in cryptocurrency digital assets and break them down to bite-sized pieces. Today, exciting stuff. First up, SEC joins major authorities and qualifies banks as Bitcoin custodians. And this is on top of what the OCC did just recently, where they said the exact same thing. But the real question is, are the banks going to step up and do it? Or are they going to fail and get the risk of being blockbustered? Also, we're going to go over a Q of the day where we take a look at the difference between iTrust Capital IRA and the Grayscale Bitcoin IRA, just to name a few. Also, we're going to talk about a Dynamite article which takes a look at what happened with CRED and the bankruptcy. And finally, just real quick, I want to go over what happened with Celsius. I attended their AMA, which is still going on. I kind of understand what happened, but I just want to give my 2 cents. So we'll go over all that, but first take a look at what's going on in the market. So today it is Friday, November 13th. And about 1:30 Texas time, and we've still got some pretty good results. So Bitcoin is holding strong at almost 16.3, and it's up 1.4 for the day. 7-day looks like it's up 4.6%, and this is not surprising. If you don't know, yesterday PayPal came out and said, hey, go right ahead and start buying crypto as much as you want to. Well, as far as Bitcoin, Bitcoin Cash, Ethereum, and Litecoin is concerned, they can buy all day long, which is fantastic. Ethereum is also on a tear, 470, up 3.5 in 24 hours and 13 for the week. And we are waiting for that Ethereum 2.0 staking, which is going to happen on December 1st. Actually, it's going on right now. You can, but ETH 2.0 is coming. Tether's Tether, but it's almost hitting at $18 billion market cap, so that's pretty amazing. XRP, watch out, 26 cents, may even hit 27 by the end of the day. Who knows? Up 4.2 and 7.5 for the week. So congratulations to all you XRP holders. Chainlink up 3% for the day, 16 for the week, $12. I like that. And then let's see, Litecoin's up majorly, which not surprising because of the PayPal incident. And what else we got? 3% for Bitcoin SV. Congratulations, Bitcoin SV holders. Good for you. 6% for EOS. Great. 2.6 for Stellar. That's nice. 3.6 for Tezos. I'll take that. Cosmos, the interoperability in Cosmos is up 15% for the week, almost 5 for the day. That's pretty good. 4.5 for NEM. I don't really get a NEM. Someone needs to explain it to me because I don't really understand what's going on with that. But seems to be in the top 25 consistent at least. They must be doing something right. Also, what else was the big one? 21% for Uniswap. Congratulations to Uniswap holders. I'm one of them. I will not sell. It's almost back to the original $4, but I like what they did as far as like getting the community involved, putting it out there and airdropping it instead of giving it to like 4 or 5 big seed fund rounds or something like that. I'll take that. VeChain up 20% for the week. That's pretty good. Wow, 20% again for Aave. They are on a tear. Good for them. 6.5 for Celsius after the whole debacle with their DNS propagation. It's almost going to hit $2. So you know what? And then Theta is up 3%. Let's just talk about Celsius right now. Let's just skip around, huh? So first of all, Alex Mashinsky and the team, they talked about what happened with the whole Celsius app being down and the Celsius website being down. So first of all, I find it odd that they're going through GoDaddy. Like, I am a small business owner. I don't have billions of dollars. I am not Celsius, and I use GoDaddy. And I will tell you from experience, what they did is they did a transfer of DNS propagation. So either they did an upgrade or something with their websites and their apps. I don't know exactly what their situation was, but mine was that my website couldn't handle all the different visitors that I had. So I had to upgrade, which is fine. They said, well, we're going to need to change the DNS where it points to, and you're going to have to upgrade that. I said, great, let's do it. And they told me specifically, look, your website's going to be down between 24 and 72 hours, and it could even take longer than that. So tell your members. I was like, no problem. So I told my members 7 days out, 5 days out, 3, 2, 1, day of, 24 and 36 hours. I was all on top of it, and I kept notifying people like, hey, this is normal. So what's going on? I didn't bolt on you, and no problems. But I find it odd that they went through this whole process, and they didn't tell anybody until the whole thing went down. And I'm like, either there's a failure on one of two sides. Either GoDaddy didn't explain it, which I find kind of odd because they explained it to me and I'm just a small business guy. And then the second thing is that they knew it was going to happen, or somebody just didn't, the light bulb didn't turn on and they didn't know what was happening. There's a third option, which I'm not even going to get into, but I will just tell you this. A lot of Twitter activity, a lot of things going on. People were talking about exit scams, of course, because that's what we always go for the worst of what's going to happen. And as far as activity levels, there was no activity levels on Celsius or the app for a good 36 hours. So everything's been resolved. The website comes up. Let me pull it up real quick. And of course, this is from Celsius.network, and it says, hey, there was a maintenance update. The Celsius website and app were offline briefly due to front-end stages and da-da-da, which is weird because this is the first time I've seen this. So they should have put this on 4 or 5 days ago. And I will just say one thing. No one is perfect, right? I think this is a huge oversight on their part. I can't believe they did it. I mean, there looks like to be a pretty well-run machine. But it is what it is. And I've checked my accounts. Everything is there. So I'm going to be cautiously optimistic. And if anything changes, I will let everybody know. But if you want to know exactly the minutia or the details of what's going on, then definitely take a look at this AMA. Which I will say, Alex is one of the few CEOs that does this like every couple of days. He's on there all the time answering questions. I don't see Brian Armstrong doing that. Actually, I don't see any CEO doing that. So, I mean, that is one good thing. All right, let me just think in the comments section. Let's move on. So first up, the SEC joins major authorities, qualifies banks as Bitcoin custodians. I'm going to tell you why this is good news, but it really doesn't matter. So what's happening? Well, the SEC said qualified custodians under the Investment Advisors Act of 1940 can provide custody of digital assets. Well, that's awesome. The regulator is also investigating the role of trust companies in providing custody of digital assets. All right. So this is what it is. The SEC now qualifies U.S. banks, broker-dealers, and registered futures commission merchants as custodians for digital assets, including both cryptocurrencies such as Bitcoin and tokenized securities. So here's the thing. Before, we had a nice little snippet of information from the OCC, which was in July. OCC, or the Office of the Comptroller of the Currency, Brian Brooks, stated that U.S. national banks and cooperative banks to provide custody of crypto. So the OCC gave the green light, but the SEC was like, we don't know because that's their whole thing about securities. But now they're saying, hey, it doesn't matter if it's a crypto, if it's tokenization, or if it's a security. As far as a cryptocurrency digital asset, banks, do what you want. Go ahead, go gangbusters. And at first glance, you're like, well, this is awesome. Well, no, it's not. I'm going to tell you why. Because this same article, or the same thing happened in July 23rd, 2020. This was an article that was written up by my man, Alex Mascioli. And this is how I met the guy. Because when I read this thing, I'm like, this guy's totally right. And pretty much what he said in the whole thing was like, yeah, they're going to get the option and they're going to pass on it because banks aren't innovators. Why would banks do this? They're making so much money on fractional reserve banking. Why would they go through the hoopla of figuring out how to custody cryptocurrency digital assets and learning about this new technology and upgrading their systems when they don't need to? Because not too many people are going to do it, not too many people know about it, and guess what? It's just not going to happen. And I was like, damn, that's true. So only time will tell, and guess what happened? It didn't happen, just like he said. So it's one of those things where it's like, all right, well, maybe with the SEC, things will change. But I will say, before I go on, the banks need to really step up and get going because this is the same thing Blockbuster thought about Netflix. And Blockbuster, if you look at the history, they were going like huge gangbusters out the gate while Netflix was building momentum. And before you knew it, it was like the snowball that rolls downhill and it just crushed Blockbuster. That's why I say banks are going to get blockbustered because they're not going to realize what happens until it actually happens. And this is what's happening with Kraken and Avanti. They're having that special depository for banks, and they're going to get a full banking license at some point. Now it's just in Wyoming, but even though they're based in Wyoming, they're going to be able to go nationwide and perhaps global as time goes on. So I'll be honest with you. I worry for banks. I used to really be ticked off at them, but now I'm just like, I kind of feel bad for them. So moving on November 9th in the statement, the SEC clarified that it recognizes all U.S. banks as qualified custodians for digital assets under this Advisors Act. The SEC's custody rule requires that registered investment advisors, or RIAs, have custody of their client assets, funds, or securities with qualified custodians. So they're saying, look, you can do these things. We're going to give you the permission. Just make sure you have everything in place. And that's what the government's supposed to do. The government and banks aren't innovators. they're really good at just regulating and enforcing regulation. So don't have them be innovators. That's not what they're here for. God knows, I mean, the banks can't innovate. They're still using Swift from the 70s, for Pete's sakes. Anyhow, under the rule, the SEC recognizes financial institutions that can function as qualified custodians of clients' assets. This includes banks, broker-dealers, and futures merchants. Such institutions meet strict compliance requirements set by the SEC. The SEC is further exploring if state-chartered trust firms can provide adequate digital asset security, or even better than those provided by banks. So again, it's interesting how they're looking at a third-party solution type of thing for custody. And this is just one of those things where when cryptocurrency digital assets come in, it's actually, people think like, oh, well, it's going to be, we're going to eliminate the middleman, we're going to lose jobs. Well, no, there's jobs that are going to be created from crypto that people don't even know what the heck it is yet. It hasn't even been created. It's the same thing with the internet. So let me know what you think in the comments section. Let's move on. So next up, I keep getting questions about iTrust for Grayscale. So I just did a Q of the day. So let's jump right in. So everybody, welcome back to Q of the day. And this is a question I actually got as a direct message in Twitter. And it was a pretty good one. And actually, it's a question I get quite a bit about iTrust Capital for IRAs versus Grayscale Bitcoin, or the Bitcoin Ethereum Trust, whatever you want to call it. And this is from Ralph. And Ralph comes with a good one. He says, hey, Rob, what are your thoughts on iTrust Capital versus Grayscale Bitcoin, the trust? The even between the 1% plus $30 per month, which is what the iTrust Capital charges for the IRA, versus the 2% ER is pretty high. And he's talking about the 2% fee for the Grayscale Bitcoin Trust. He says, somebody can check my math, but Bitcoin needs to be substantially above 432,000 for iTrust to surpass Grayscale Bitcoin. Maybe that happens by 2025. And I'm like, yeah, okay. So it's a good question because, people keep asking me like, hey, with iTrust, it's, $30 a month and I want to do my IRA and it's, it's kind of pricey for me. I'm like, you know what? That's okay. You don't have to do an IRA. Don't do anything, obviously. But for me, I definitely feel it's going to be necessary because I think about in the future. And when I was younger, I didn't really think about that too much. I was like, I might even make it past my 40s, so who cares? But at some point, you start to think about, okay, what's going to happen? And I don't want to pay a ton of money in taxes. So here's the thing with IRAs. Because some people got ticked off with the fact that I was like trying to minimize taxes. I'm like, well, if you want to pay the government, pay as much as you want to, I suppose. I'm not a big fan of giving my money to the government when they're just going to waste it anyhow. So there are going to get taxes from me. That's just how it is. Because with IRAs, you can only contribute up to a maximum amount of usually $7,000 per calendar year. So it's not like I can take $2 million and stick it right in my IRA per year. It doesn't work like that. So that's just one of those things. So government's going to get theirs, but my job as a concerned citizen is to not pay them an exorbitant amount and leave me broke. Because guess what? At some point I have to think about not just myself, but what about my wife? What about my kids? And what about my grandkids? So it's one of those things where, I'm going to play the game to the best of my abilities in a legal way. That is a big thing. So if we're trying to look at like different IRAs that are out there, there's a lot of different ones that you can take a look at, but Grayscale seems to come up a lot. And the big thing about Grayscale that I found was there's an issue with their premiums. Because you have to remember, it's not just like you go to Grayscale and go, okay, Bitcoin is 20,000 today. Give me one Bitcoin for 20,000. Great, and then that's it. And then you think it's just 2%. There's also a premium on top of that. And there's a good article from Medium, which talks about interpreting Grayscale premiums. This was on August 1st of this year. And just so you know, the premium is the amount you're willing to pay to not custody your own private key and still get exposure to the underlying asset. Because you have to remember, people who are buying into Grayscale, it's a swath of people, but mostly the lion's share, 84%, are institutional investors. And they can't legally custody everything for their clients. So they're going to want to offload that risk to a third party, Grayscale or whoever else. So that's institutional investors. Then you have accredited investors, which if you make over $200,000 per year, you can be an accredited investor, and that's part of them, sure. Also, you have retirement accounts, the thing we're talking about, me and you and I, however you want to say it. And then, of course, the last one is family offices where they can't custody anything themselves either. So you are paying a premium for Grayscale to handle the custody. Because if you really think about it, who wants to deal with, I mean, it's not just you. It's not like you're putting $100 million on your nano ledger. You are controlling funds for your clients, for different people that you're loaning it out to, if that's your thing. So you don't want to deal with that headache of getting hacked. Look, exchanges have to deal with it all the time. They have to hire big people to deal with that, and they still get hacked. So it's one of those things where this isn't probably a good idea. So that's where the premium comes into play. Also, Grayscale Bitcoin Trust premium to net asset value. So premium to the NAV or net asset value has seen two sharp declines in the first half of 2020. It went from 40% into the low 20s, close to the tail end of the first quarter. Grayscale Bitcoin's premium declined again in the late second quarter from 20% to about 10%. And the recent Grayscale Bitcoin premium amounts look even more reduced when compared with year-to-date average of 18%. The highest premium has been 41, and the lowest was just 3. The historical average has been 39%, while Grayscale Bitcoin's highest premium recorded was 132%, and the lowest was negative 0.3. So there's a big, like I said, a wide swath. And there's a website that you can check out for the most accurate, and actually Ralph gave this to me, so thanks, Ralph. It's from whitecharts, whitecharts.com. I'll link in the description. And you can see the actual amount of the premium that they are charging from the last 1 year. You can break it down to 1 day, 5 days, 1 month, to 5 to 3 years. So you can take a look, and right now we're sitting at around 20.38% as of November 12th. So hopefully that answers your question as far as a Grayscale. So it's not just that 2%. You have to also remember there is a premium that you have to pay. So with iTrust, that's part of the reason why I went with them. It's because it is $29.95 for $30 a month. It's $30 a month. I hate $29.95. It's a stupid thing. $30 a month, and then you have to pay a 1% for purchasing. So for me, I think like this: if you can save me a ton in taxes, then go right ahead. If you want to find out more about iTrust, I did a video. It goes over all the things as far as like a traditional, a Roth, a SEP IRA, and all the different types of accounts. If you have like a 401k, a 403b, a thrift savings plan for the military or TSP. And I will link that at the very end of this video so you can give it a watch. Also, if you use the link in the description to take a look at iTrust and sign up, then you get the first month for free. And then also, just as a reminder that what is very rare in these days is that you can actually go to the website and book a call with somebody and talk to a live person. That's insane, especially in these days, right? To talk to a real live person. So go ahead and check it out if you want to. And that is it for Q of the day. So hopefully it answered your question. Let's jump back. Let's get into story time, shall we? This is a pretty sad state of affairs for CRED. And it's a really cautionary tale, and it's perfect timing for what's going on with Celsius. I'm not trying to say Celsius is like CRED. That's not what I'm saying. But I'm just saying that there's a lot of different things that are going on that you really need to be made aware of, and just be ever vigilant. So this is about CRED. It was written by Nate Dogg DiCamillo, how you say his name. And it's a fantastic article. He's a great writer, and I'm actually going to follow him on Twitter. I already did, actually. So this is the takeaways. CRED's bankruptcy has left hundreds of depositors who loan the company more than $100 million worth of crypto, wondering if and when they'll get their money back. Let's just start with that. And when we're going through it, I want you to think about this. The company's bankruptcy filing primarily blames its woes on the alleged fraud by an outside investment manager whom CRED entrusted with 800 Bitcoin, more than 10 million. So just remember those numbers, 10 million, 800 Bitcoin. I'll explain in a bit. So when CRED filed for bankruptcy protection on Saturday, the crypto lender told the public only part of the story, according to 7 former employees interviewed by CoinDesk. And this is where you get all the information. So Nathan here, he did a lot of digging, and he went to the actual source and said, what's the story behind the story? And that's why this article is so great. So the company's Charter 11 filing attributes CRED's decline to former Chief Capital Officer James Alexander. Remember that name. James Alexander. The firm also singles out Alexander's alleged misappropriation of customers' digital assets, which the following claims limited the company's ability to hedge against fluctuating crypto prices. But really what it comes down to is lack of transparency, say the 7 different former employees. For starters, CRED's investment with the allegedly fraudulent asset manager was worth a little over $10 million. Yet, as of November 7th, CRED had $67 million in assets, supporting $136 million in liabilities. So that doesn't make any sense. If you lose $10 million, but you got, 67, 136, what's the problem? I've lost 20% portfolio, and it didn't crush me. I'm not going to go to the bank and say, I need to file for bankruptcy. So things are not adding up. Quantacoin. So first of all, this guy right here, let me scroll down. Where is he? This guy is a CEO, and his last name is Shat. And every time I say it, it makes me laugh because I've never grown up. So if I giggle sometimes, you know why. So Shat here and others also approved of CRED's investment in the asset managers fund, Alexander's, unnamed in the filing, which the former employees identified as Quantacoin. So remember that one is too, because Quantacoin is just this thing, this entity, this person that they gave a lot of money to, yet now he's gone. So based in Delaware, Quantacoin was set up to generate yield on investors' Bitcoin, primarily through the use of derivatives, and is one of the 4 funds that CRED's investment committee chose to invest in, former employees said. So they said, okay, Quantacoin, great, we're going to give you X amount of Bitcoin. Okay. The total investment in Quantacoin was 500 Bitcoin in March, and then in April it was 800 Bitcoin. That's a lot of money, just to say, here you go. But I mean, if you trust me, do your due diligence, do a background check, sure. But here's the problem. Quantacoin's manager disappeared in August and stopped returning emails. And Inamula said he was the like the CFO or something like that. According to multiple former employees, the FBI is looking, but they haven't found anything, and they weren't available for comment. So here was the shaky start. Initially, the company placed its bet on a business model popularized by firms like Celsius and BlockFi, which are offering crypto-backed fiat loans, so traders could buy more crypto and other borrowers could make big purchases like buying a car without spending the original asset. So really when you look at these places, Celsius being one of them and BlockFi, the question needs to be asked, who are you loaning this to? How transparent are you? What do I need to know? So remember that. What and who are they giving your crypto to? That's the question. So of CRED's $136 million in liabilities, $114 million is owed to holders of CRED earn notes, who number between 500,000 people. So a lot of people got screwed over. That's what it comes down to. Under Shat's direction, this guy doesn't know Shat, CRED built a system by which CRED would convert the crypto loaned by depositors to yuan and funnel it to a Shanghai-based consumer lending platform called MoCredit. MoCredit sounds legit, sure. MoCredit sounds like a rapper. In turn, MoCredit used the funds to offer microloans to Chinese borrowers with interest rates of over 40%. So first of all, if you're giving loans at 40%, that to me is predatory lending. However, I don't think they have that in China. I'm just saying, 40% is ridiculous, according to former CRED employees. Now remember, this is all information that Nate Dogg here got from these former employees of CRED. So it is all, sources, and we'll see if it all turns to be true. But the Chinese lender is led by CRED co-founder Lu Hua, who also did not respond to requests for comment. So this guy, I guess maybe he's a Chinese nationalist, and he came over and said, hey, I got a great idea. Let's lend it to these people in microloans, and we'll charge them 40%. We'll give the people 6 to 8%. We'll pay it back, and then we'll keep the rest. That's what it sounded like to me, which is pretty ugly. There he is, Shat. So according to former employees, the loans were 2-week microloans, less than $200, and they gave this guy Hua a 36-day call provision, meaning the lender was allowed to demand full repayment within a month or two. But that didn't happen. So this was the problem. When the whole thing with the coronavirus hit, a lot of these loan places started to go out of business because they couldn't call the loans, because they were loaning out so much money and they were doing these PONZI type of things. And this is what happened with CRED. So they tried to call back $10 million from MoCredit, but MoCredit was not able to return the funds because they spent it all or gave it away or made bad on their investments. And this is the problem. Again, where's your money going? Inamula also said CRED's holdings of 3 obscure cryptos, TAP, LBA, and UPT, valued at 14.5 in the filing, should be considered worthless because the market for each of these coins is illiquid. So I don't understand if you're a business, while you go into some kind of high risk type of crypto or any kind of like investment, if it's super high risk and you put a lot of money, 14.5 million, let's say it's 100 million, that's 14%. Why would you do that? It makes no sense. So moving down, the asset troubles made it harder for CRED to honor its liabilities. For most of its history, the company has been using customer funds to pay out redemptions and interest on the earnings product, several employees said. This wouldn't be a big deal if the company had positive net assets, but they didn't. So again, almost like a Ponzi scheme. They get money in from old people or from new people, it's paid out to the old people. But too many bad loans and investments laid bare the hazards of operating, which was in essence a fractional reserve bank without the usual protections. So again, they'd taken $100, they'd loan out $100, and then they hope it would come back. But it didn't come back because the dish ran away with the spoon, and they got screwed. Everybody got screwed, really. And like a bank, CRED became vulnerable to runs. The company would not have been able to pay its debts if many customers tried to redeem all at once. So I will just say this. CRED obviously was some type of scam going on, but if you think about it, aren't all banks scam? Because like if any of us went to the bank right now and said, let's say everybody went to the bank right now, just a crazy thing, right? And said, we want all our money. They would never be able to repay us back because of the fractional reserve banking. That's a scam. That's a real scam, and that should be stopped. But it is what it is, and it's like a normal, occurrence in our society, and that's just how it is. So trying to reboot, this is where it gets crazy. On top of all the rest of it. In May, Alexander left CRED to start CRED Capital, a separate company. It would conduct Wall Street-style activities without putting CRED's commercial business at risk. CRED took a stake in the new entity in order to diversify its interests so it would be less dependent on Mo Credit and Hua. But then in July, Shat fired Alexander and took over CRED Capital, so that makes no sense. So how did Alexander leave CRED to start CRED Capital, and then Shat said, I'm going to fire you, but it's a new business. I don't understand. Alexander sued CRED for illegally reincorporating CRED Capital, and now they're going through a big lawsuit and all this stuff. So, and then it talks about the aftermath, and really it comes down to this. This is a gentleman who had invested, and he said, we weren't investing into a platform. We were investing in a crypto fund of a fund of a fund. He states they were very recklessly misrepresenting what they were doing without the same yield and without disclosing the risk, because they were getting 6% and these guys were supposed to get a bunch, and they didn't because they couldn't manage it correctly. And the jig is up. So that's what happened to CRED. So when you're looking at what's going on in the background, make sure that the people and the companies you are dealing with are transparent, they're out there in the open, and that you know exactly where your money's going to. So let me know what you think in the comments section. And that's essentially it for today. A lot of stuff going on, and expect some volatility coming up. There's going to be a lot of different problems, especially in the US, and especially with our crypto market. But if you just hold on, have strong hands, and everything should be okay. So if you like those types of videos, Tuma's going to pop up on your left and right, let YouTube do their magic. I will pick the one about the iTrust, how to minimize taxes. And that's it. So thanks for sticking with me for the whole thing. I really appreciate it. And I'll see you on